Money Morning Live. Nice to see Vaz back in the seat hanging out with us throughout the week. But as she mentioned, we do have Tom Gentile here for the next half hour. Power Profit Trades is about to hit, and we're bringing Tom in 5, 4, 3, 2.
Hey everybody, Tom Gentile here. It is lunchtime. Welcome to Power Profit Trades. Glad to have you here once again. First off, for those of you who joined up on the Crypto Boot Camp, we are kicking that off today at 2 p.m. In fact, for pretty much the remainder of the week through Thursday, I'm doing this thing. So I can't wait to get started with you. Today, it's Stock Pattern Monday. In fact, I'm going to be doing this all week long. We're going to go into trend trading patterns with you. So before we do that, Eric, I haven't talked to you since last week. How you doing?
I'll tell you what, Tom. I had a good weekend. It was a Giants game. I watched for the first half of the game the worst football team in the NFL, and then an amazing football team pulling the win with quite a bit of luck. And looking at your setup right there, it looks like you had a good weekend of football as well.
Yeah. So, I mean, Brady's wife might not be happy with him right now because, she didn't show up for the game. Little tweet out to him, but that's not the same. But I can think of thousands of people in the Tampa Bay area that are happy with the performance last night. It wasn't like Super Brady because they're still kind of feeling things out. But hey, a win's a win, and so we're excited about that. And I mean, speaking of wives, let me just ask this real quick. So I need some help from the group. Whether you're joining me on YouTube or whether you're joining me on Monday Morning Live, I need your help. This is what I need. So my wife's 50th birthday is coming up pretty soon. And if I don't want her to go Giselle on me, which means not showing up, I got to do something pretty big. So in the chat box, if you could tell me a little bit about what you would do for your spouse for his or her 50th birthday party, that'd be great. I got a couple things in mind. I got some stuff already mapped out, but I am open to suggestions. So, Eric, what's your milestone? What have you done for milestone birthdays? What has been done to you for milestone birthdays?
My wife hasn't had the milestone birthday yet. Her 40th is coming up over the summer, so I have to plan for that as well. So I'm going to be taking tips from the chat. But I did the whole Vegas thing when I had my milestone birthday myself, and it was a lot of fun. I mean, played some poker, it was good. But I'm going to be taking some tips here as well. My wife wants to go away. Is that what your wife is looking for, or no?
So, you know what she does?
Mm-hmm.
She's already told me she's not looking forward to just having, everybody over to celebrate something that she'd rather just take off with me. But you have to do it. I mean, typical Italian family. Her sister's going to act like her mother if she doesn't at least mark the occasion. Uh-oh. So we're going to do something. I think we're going to do two things. My idea is, I want to go down to Central America. I want to go down to Belize. I want to go down and I want to hit that reef. It's called the second best reef in the world, in Belize, and dive that. And I want to, snorkel and dive that with her. And I think that'd be really cool because she doesn't know that I'm planning that. But the planning one, the mark the occasion thing, I've looked at some ballrooms. I've looked at a couple things. I'm open to suggestions because I have time. I have a little bit of time on my hands right now. And you being in upstate New York, I mean, you got tons of opportunities up there too. I mean, I lived up there too. So there's a lot of things you could do. If you had to do the resort thing, Eric, and you didn't have to go far, you could go to Resort World. It's where is
I don't even know
place?
that.
Monticello.
Oh, that's not. I used to work up that way, by the way. So I try and stay away. I don't want to run into any old coworkers or students or anything. But I think she wants to go someplace a little bit more exotic than right around town. We'll figure it out.
Yeah, cool. So anyway, guys, welcome to the show. Glad to have you here. I'm going to check out all your suggestions here as we when I get done with our program today, because we only have 30 minutes here. And I want to talk about trend trading, and I want to talk about quantum data profits, because that is our trend trading strategy that we use for our alert service. Basically, what we're doing is we are using I like to call them bespoke quantum scripts, quantum script software. I'm going to actually show you some of that today. We're going to take a look and dial down on one of our most recent trades that we did. and I want to show you a little bit about how this trade was set up. We're going to talk about the entries. We're going to talk about the exits. And I'm going to show you exactly how we played this one. And by the way, we've had a heck of a win streak here with Quantum. Last week, I think I mentioned at the first show on Monday last week that I ran into a guy at Costco, and he was amped. This guy was from Brooklyn. He was amped, and he says, "You got the best. You got that Quantum is the best." And I mean, it's great. I told him, I said, "Hey, you know what? I've been doing this a long time, and I get." There's times when everything we do, it's like the Midas touch. And then there's times where it's not the Midas touch. It's anything but that. That's trading, folks. But what we look for and what I do across every single one of the strategies that I trade is I do the same thing. I look to spot pattern-based opportunities. I'm a pattern guy, okay? I look at patterns. I breathe patterns. And then it's just a matter of matching the right trade, the right options trade with the pattern that we're finding. Price-based, time-based, volatility-based. And so with Quantum, because it's a trend trading system, this is exactly what we're doing. We're looking at matching price-based and time-based trades. Not so much volatility. We're going to have trend trading opportunities where the volatility is high. We're going to have trend trading opportunities where the volatility is low. And it's just a matter of when we take that, we'll typically, I like to look at, for every opportunity, I look to see if there are 2 different trades I could do. And one could be a high probability trade, and one could be a high reward to risk trade. And I'm going to show you exactly what we're talking about. In fact, any of you that are here that want to be part of the QDP community, you want to be a member of Quantum Data Profits, then we've got our best offer ever right now. So call Gabe. Phone number is on the screen, or you can click the link for more information on how to be a member of Quantum Data Profits. Now, let's rewind to our most recent winner we've had. Okay, we don't have to go back that far, Eric. This was something that we were in last week, and the company's called Teledoc. And so I've got Teledoc on the screen right now, and I've got the last 40 days, because what I want to share with you is the chart. I want to show you a couple other things. I want to talk about the trend and how we identified it, why we like this trade, the 2 trades that we offered, again, that high profitability trade and high probability trade. So you got the conservative trade, you got the aggressive trade, and then how the approach played out. And it helps you so that you can understand what the best strategy is for you, whether or not you are a Quantum Data Profits member, or if you're just looking to up your game when it comes to trend trading. All right, so here's Teledoc. And what I want to talk about here first is, let's just look at the chart for a few minutes, Eric. So the chart I have is a 40-day chart. The reason I chose 40 days is because you can see the price action right here happened right before the earnings announcement. So we had hit a high of just above 44 3 days prior to earnings. And what you're seeing here is I've only got one thing on the screen. I've got what we call our first 2 lines of code. This is our first 2 lines of code in Quantum Data Profits. Is a simple moving average crossover, right? We do a lot more than this, but this starts the scan. This takes the thousands of stocks down to a few dozen, and then from there, we then add scripts to that to bring it down to the very best trades. So what made Quantum one of our very best trades? Well, take a look here. It started with earnings. Earnings, as you can see, Eric, when you have an upside down triangle, this is on our software, on my software. Mm-hmm. When I got an upside down triangle, that means earnings missed expectations. Now, you don't need to know that. You just need to see what happened the very next day. Boom. We went from a close at $43 to an open down around 35 and change. That was a big drop for the day with Teledoc. Now, a couple of things happened after that. Okay, first of all, you can kind of see what happened here. We created a bit of a range, 33 to 37. That was the day after earnings when all the fear came in, and fear got induced into the market. And I want to mention this. We weren't in this trade. We were in this trade 2 weeks after this happened. This is all of the setup that's starting to happen, folks. All right, the fear came in, and then they figured about 2 days later, wait a minute, maybe we oversold this thing. And they ran it right back up to where we were before the gap. Right now, we run it back up to the gap. Here's what happened, folks. Couple of things happened. The trend, even though we were filling that gap, changed. The trend went from bullish to bearish. That's the first thing that we noticed. Number two, all right, we filled that gap, which brought us back up into this area here where we crested right around 41. Do you know that we actually, when we got into this trade, when this trade flipped from being a first round draft pick to an overall draft pick, then we were able to then identify this as a bearish opportunity. So we took this trade. We didn't get into it and just started falling and, we're all kumbaya. We went through a couple of days where it went against us, right? Kind of jumped up a little bit and tested us. But then, come about the middle of August, this thing started to break down again. We saw the breakdown that occurred from around 40 down into the low 30s, get a little bit of a rebound, and then it happened again, and it took us all the way down into the high 20s before catching that kind of oversoldness that happened. So a couple other things that I spotted on the chart. Well, our percent change went from negative to very, very negative as we got our signal. All right. Volume was high. But you take a look at volume on this stock. This stock trades an average of 5 million shares a day. But volume got all the way to 26 million after the earnings announcement came out. So you had this big red bar of fear that came in. So when you go from 5 million shares a day to over 25 million shares a day, that is a huge 500% increase in volume in one day.
It's a big jump.
And 2 days later, we're right back down to the 5 million average again. And so that's just that big fear-induced. Then a little buying came in, and then right in here, we were getting our quantum signals, our quantum verification signals. A couple other things you can see here is that the MACD, which is a moving average convergence divergence, this is based on two moving averages, and again, some smoothing factors. Well, they all turned negative. They started turning negative right around the time that we were getting our quantum bearish signals. You can see it kind of went positive for a couple of days, and then boom, back down to the negative side. Kind of moving on. Bollinger Bands got wider too. That just gave us those profits that happened much faster. But we really didn't see any overbought, oversold readings while we were in this trend. Okay, we didn't see any short-term overbought, oversold readings. Anyway, to add it all up, this is a lot of the stuff that we look at, but the most important thing that we look at before we even put the T-Doc trade on or any trade is that we go in and look at what's happened in the last couple of years of data. So, Eric, you've got a little table that I'd like you to put up. And that table really shows the back test, right? The more recent back test that we did with T-Doc. You can see there, we show a percent profitable stock at 100%. All right. And then we have a percent profitable trade at about 2/3, 60, call it 67, just a little less than 67%. The most important things that I like to look at, the percent, we look at math expectation. All right. That's the third line down. That has to be a positive number, folks. If it's a negative number, this would never even made the first round cut. See the average profits, $419. Okay. That's based on, we got average profits of $419 and an average loss of $114. Okay. Our risk to reward ratio all the way over on the right-hand side is a whopping 3.7 to 1. So that means for every dollar that we risk in this particular trade, it has rewarded us with $3.70, right, on average. So you can see there, and we're looking at this using $500 per trade cost. All right, now per trade cost isn't exactly the same as per trade risk. When you're putting $500 out there, that's margin, that's debit, that's what it costs to put the trade on. The biggest risk that we found during this back test was $369. So when you add all of this up, we got good math expectation, positive numbers. Max profit was much, much greater than max loss. Risk to reward ratio looking really good. And we were looking at all this on a trade that expired 45 days or less. So when you add all of that up, that's what gave us the alert that we see there as well. So we knew we wanted this bearish opportunity. Now, you can, when you see a spot of trade like this, you can go big or you can go conservative. And if you go really big, shorting the stock is going really big. The problem is that comes with a big cost. And that is, if you're going to short the stock, you better have a lot of money in your account in case you are wrong. The other ways to do it, and you know which ones I'm talking about, is going bearish using put options or put spreads. So Eric, you have a couple of bullet points we had that we sent out to our alert members on this. So let's diagnose this. Let's start with the entries.
Yes, let me dive in. I got quite a bit here to go through. So this is the initial email right here. It's from Tom Gentile. Here's new quantum scripts opportunity for you on TDOC. Choose one of these, not both. And I'm about to show you what both of these are. So choose one of the trades shown above that best fits your trading style. The first trade has a higher probability of success, while the second has a higher profit potential. So here is the first one that's going to give you guys the higher probability. Action to take. Open a put debit spread on Teledoc Health for a higher probability trade. The instructions for entry were buy to open the Teledoc September 9th, 2022, $36 put, and sell to open the Teledoc September 9th, 2022, $34 put. This is creating a vertical put spread. Pay no more than 75% limit for the combination and submit as a spread order. Enter as a daily order. This was the Teledoc put spread with the higher probability. Now we're going to have the Teledoc spread for the, let me move this out of the way, for the higher profit. And this one, your action to take is open a put option on Teledoc Health for a higher probability trade. The instructions are buy to open the Teledoc September 9th, $35 put. Pay no more than $1.80 per limit contract. Enter as a day-only order. Now, Tom, are you going to take us a little bit more through this?
Yeah, so let's first talk about the difference between the two. So obviously, these two, a put, simply buying a put. I mean, this is one of the lower option levels you need. Calls, puts. I think the lowest ones are calls, puts, and covered calls. When you go to spreads, when you actually do a spread, that's going to require a higher level of barrier to entry when it comes to options clearance, right? It's not that hard though, folks. A lot of times brokers will say, and I've heard new folks say this, I can't get this next level clearance. I can't get level 2 or level 3 clearance or whatever clearance you're trying to get to. You know what will help you get through that hurdle? You go back to your broker and you say, I understand that spread trading actually has a lower cost and a lower risk to you. And I understand this because I'm learning this from people who do this all the time. You'd be amazed how often your broker will look at an email that comes through and they say that and that email is telling them that you're understanding that spreads are to be put on and taken off as a one-ticket trade. Once you tell them this, a lot of times they'll say, okay, he understands spreads, and they'll light you up to allow you to get that next level, because everybody, I mean everybody, not just those of you that are watching, but even us on the other side of the camera, and it isn't just me. It's the Marks, the Garretts, everybody associated with Monday Morning Live. We were all in that position at one time where we didn't have access to that next level of clearance. And we got there, all right? So it just takes experience and a little bit of time and knowledge, and that's really what it is. The other thing I want to mention, too, is that I love starting out the week with a profit. I really do. And we'll talk about that in a moment, because I want you to see, let's go back to that chart again, Eric. So here's where we put this trade on, right? This was on the 11th. As you can see, we went a couple of days, it really started to get strong, and then it broke down. And I mean, in a matter of 4 days, we went from 41 all the way down to here. We had 4 bearish days in a row where it was like gap and run, gap and run, gap and run. These were no fill the gap days. And we jumped from a price of 41 down to 33. That was very, very fast. And in a few days, in just those short few days, we sent out another update. Eric, take it away.
Yes, you did send out another update. This is the action to take. Close half of your Teledoc higher profitability position. Sell to close the Teledoc September 9th, 2022 $35 put at 2 times your entry price for 100% gains. Move your stop loss on the remainder of the position to 2 times your entry price to ensure we have a profitable trade.
Right. So let's back up a second. So if I bought the put spread on Teledoc and I paid 75 cents, which by the way is only $75. All right, you take the cents. For those of you newbies out there, you take the cents, you multiply times 100. You take anything we do in options, multiply times 100. That's per contract or per contract spread. The contract spread was only 75 cents. That's $75. And down here in Sarasota, that's the cost of a good meal these days. In fact, going to the grocery stores, I don't think you could fill a carry basket in some of the stores for less than $75. So it's a nominal amount to pay. If you would have went with the put option itself, some of you that are QDP members did, that was at $1.80 per contract. So $1.80 times 100, $180. Now, even $1.80 was cheap, Eric, because we've got some trades out there that it cost $5, maybe even more, $5, $10 for option trades, depending on, things like the cost of the stock, the option strike price, the volatility, time to expiration. These all factor into option prices. Both of these were cheap, but one was very, very cheap. Again, the difference is that with the higher probability trade, cost was cheaper, your risk was cheaper, your break even was closer to the stock price on that day. And the thing is that you had that potential, that double potential to happen. With the higher profitability trade, the cost was more expensive, but you didn't have an option working against you. That's what happens with a spread. You got one working for you and you got one working against you, and you're profiting between the spread of the difference of each. When we're trading just put options, and you own a put option, you are relying on that put option alone to go higher. And when you get it move, like we saw in Teledoc, where we saw that big drop off in a matter of a week, less than a week, that's going to make the higher profit trade double in value faster. And that's what happened. And we ended up putting out that action to take. And that action to take was to sell half of that position that we did in the beginning. So closing out half your position, if you buy two spreads for 75 cents, you're basically paying that $75 times two, you're paying $150 plus a small commission. Well, if one of those spreads becomes worth $150, you could sell one spread for $150, take back your $150, and now you've got a free trade on to ride out for bigger potential gains. So we did that. We did that with both of these trades, Eric. So,
Yes,
back to the chart again, if you could just take a quick little look at the chart. All right, as we dropped inside of a couple of days, we were already taking half of this off when it doubled in value. Right, so that was our T-Doc trade coming down the mountain. Right, as the stock dropped, our put options and our put spreads both rose in value. So the reason we like to close out half the position is, looking back in time, Eric, would we have closed out half the position? No, we'd have held it around all the way down to here. But that's not what trading's about, folks. Trading isn't about going back and looking at a position and wishing you would have held on to it longer. Trading is about, again, for me, it's about spotting opportunities, creating these low-risk trades. So we spotted this opportunity with quantum scripts. And I'm going to talk about more tomorrow on spotting these opportunities, how we backtest, and we're going to have some stocks to look at too. I'm going to give you a list of potential quantum bulls and bears, right? But again, when we look at this, we're looking at, once again, spotting opportunities, creating the low-risk trades. Both of these trades were low-risk trades. One was just a lot cheaper than the other. And then it's a matter of, and here it is, wait for it, plan, execute, manage. Plan. That was the first two things that Eric talked about when we put these on. Actions to take on the entries. Okay? We had actions to take on the entries, but we also had an action to take on the exits. And Eric, did you get through the exit on this, or did we blow right by it?
We blew past it. You want me to pop it in really quick?
Bring that up, because it's important to show people that we do what we say.
All right.
Right?
You got it. And we just heard you say that you love starting out the week with a profit. And for those of you that took your higher profitability trade on Teledoc Health, that's exactly what we're doing. As of this morning, the position has eclipsed our 100% profit target, so we're going to lock in that gain on half of our contracts while letting the other half ride for even bigger gains, Tom.
Yeah. So what did we do? We told people as far as the put, we told them to sell out at 2 times the entry price. So what's 2 times 75 cents? $1.50. What's 2 times $1.80? $3.60. Okay, so you go, you know what your double is. We try to keep it simple too. Trailing stops are great, but when it comes to communication on trailing stops, that can get a little bit fuzzy. All right, when it comes to alerts, when I put something out and I give you an entry price at or better, we all know what it is. Some of us might do a little better than others. Okay. That's just happens to be maybe part of it is on luck on when you put the trade in. But when we put the trades in, we're not just done right there. When we get filled, all right, we're immediately putting in the exit strategies. I can't tell you how many times I got filled on something when I was out at the store, when I was out at a restaurant grabbing lunch that afternoon. Maybe I was at the pool. Maybe I was cutting the grass. Maybe I was doing something during the market hours because I didn't have anything else to do and I didn't want to just sit in front of my computer and watch the market tick-tock back and forth. That's not me. So that's why we go ahead and we put these things out ahead of time. And we put them out as, and I'll say this again, entries are almost always day-only orders. If I don't get filled on that entry, that's fine because I have other ones we can do. But when we're putting our exits in place and you want to put them in place for a double, you're not going to get a double. Very rarely are you going to see a double in the same day. That's day trading. It's not what we do, right? So in order to have that in place, once you have that order in, that Teledoc order is an open order. You can see it on your screen. It's an open position. In order to have that close position set ahead of time, you want to make sure you put that in as a good till canceled because chances are it's not going to double. It's not going to double the same day. It might happen a week later like it did here with Teledoc. It might be 2 or even 3 weeks if it moves in your direction. All right. So that's what we do. We close out half that position and take that free trade. You know what else it does, Eric? It allows you to trade a little less with a little less stress. Now you got somebody else's money you're trading with. So if it goes against you, and we've had those happen, we've had a quantum trade or two that have gone down, and they turn around, they tick back up, and worst case scenario is we end up breaking even. That's going to happen from time to time. Now there's some risk factors I want you to think about, folks, when you consider these two trades or anything in your trading arsenal. What's your risk appetite? All right. If you like more risk, then shoot for those higher profitability trades. If you like less risk, go for the higher probability trades. What are your trading goals? Right? With a trend trading strategy, we could be in something longer than a week. I mean, Teledoc, we got out of half of this in a week, but then we held the rest of it for a little longer. But then there's been some trades. We'll put trades on that will go out to as much as a couple of months. We could be in a 60 to 90-day trade, and the trend is our friend. So keep those in mind. Obviously, your options clearance level is going to have something to do with it. And of course, your comfort level and your experience are also going to have something to do with it. So the question you need to be asking me right now is who's going to be the next Teledoc? All right. Who's going to be the next Teledoc? Well, come back, and for those of you QDP members, come back and join me and Joe, all right, at 1 o'clock, and we'll show you exactly what we're looking at to become the next Teledoc trade. So those of you that are QDP members, Joe's going to be live with you at 1 o'clock. We're going to talk about our portfolio updates. We're going to do a little coaching. We're going to do a little Q&A. If you're not part of the QDP community and you want to be, you say, hey, trend trading is for me. I want to find out more about this. We got our best offer ever out there right now, folks. Call Gabe on the phone numbers on the screen, or you could just click on the link to see the offer as well. And lastly, but not leastly, if you're with the boot camp crew, I'll see you at 2 p.m. Everyone else will be here again tomorrow, same time, same place, and I'll see you then. Bye, everyone.